I always talk about the tax triangle. I think it's important to know. And tax triangle is almost like, well, you have three different areas. You have the after tax bucket, right? We call it after tax, meaning like it's money you've already paid taxes on. It's in your like bank account, brokerage account, and most of the gains there are either interest or capital gains, right?
Correct.
Your principal is not taxed, but you're paying interest and capital gains. Think of that as on the left quadrant of a triangle. On the bottom right, third.
There it is.
Yep. You have the pre-tax bucket, and that's all your IRAs, 401ks. That has never been taxed. You get the benefit. Uncle Sam said, hey, when you put money in, we'll give you a deduction. But for the rest of your life, all the growth, withdrawals, everything is fully taxable. That's never been taxed. Every dollar that comes out is taxed, and that's taxed at whatever your bracket is at that point. Going to the top third of the triangle, you have the tax-free bucket. Now, that's ultimately where, in a perfect world, you'd have everything, because that's the best. Tax-free is if you need to take out $50,000 out of your portfolio, you just take out $50,000.
Yeah, I was going to say that because we were talking about the withdrawals earlier, and it's just anytime we send money from a Roth, it's like, oh, no, there's no withholding taxes. No, what you ask for is exactly what you get. That's it.
Exactly. So think of the bottom 2/3 of a triangle, right? You have, ideally, you want the after-tax and the pre-tax money, you want those flowing up to the top third to tax-free as much as possible, right? And every plan's different, but to get to the after-tax to tax-free, there's things like Roth contributions, right? Making contributions to a Roth. If you're working, sometimes you can make 401k Roth contributions, right? And each one, the 401k does not have income limits. The Roth IRA contributions do, but sometimes people aren't even contributing to Roth. If you can put $14,000 a year for 10 years, that's another $140 that you can move to from a after-tax to a never-tax bucket.
Well, that's the thing, too. Whether it's Roth contributions or Roth 401ks, just on the 401k front, make sure you know what your employer is sponsoring and what's available there. And then for your Roth contributions, obviously, again, there's income limits on the Roth contributions, just separate from the 401k. There's a lot here. I apologize for all the jargon. But it's more so just make sure you're taking advantage of it.
Yep. So that's on one side. We're trying to flow as much of the after-tax monies up to tax-free.
Right.
On the other side, the other right third of the triangle, we're trying to how do we get money from the pre-tax to the tax-free? That's through conversions. So the idea is through a well-thought-out plan over time. It's not done all at once, unfortunately, but through a well-thought-out plan, we try to get as much as we can within reason from the bottom two buckets to the bottom two sides of the triangle to the top, which is tax-free. And everyone's different on how much we can get to there. But if you have even a portion of your retirement in a few years, whereas right now you have nothing, you have to start somewhere.